Well, hello everybody, and welcome to this episode of Fantastic Female Fridays. My name is Susan Hayes Cullerton, and I am your host for the show. And I am really excited about today's episode. I have to tell you a little story around this particular lady who I'm going to introduce you to. Back in the teeth of lockdown in June of 2020, I was in a bookstore in Ireland and I was looking for a book to read. And at that time, even bookstores couldn't get supply in, etc. And so I came across this title of a book, and it was called Do Nothing. And I have to tell you, I absolutely disagreed with this title fundamentally, because I am not someone that does nothing ever. So here it is, okay? Here it is right here. And anyway, here I went and I bought it, and it says break away from overworking, overdoing, and underliving. So off I went and I read the book, and I have to say I found it was absolutely fascinating. And of course, what I wanted to do was to introduce Celeste Headlee to you, our audience, so that you could hear more, and of course from the woman herself. So on that note, what I'm going to do is I'm going to bring Celeste onto our screen now. But before I do that, could I ask you please to tell us where you're tuning in from today? It always intrigues me to see where all over the world that you're joining us from. So can I ask you all, I'm looking here on the chat, and I'm just going to wait and see here where exactly you're tuning in from. Just going to make sure that I'm getting to that right now. Okay, and I see Terry is here. Terry is joining us from Texas. I see VV Nation has been sending message in there. That's great too. Who else have we got here? Just going to let you all, hello there Rodrigo, joining us here from Boynton Beach in Florida. Susan, the name is good, is joining us here from Toronto in Canada. Please do keep your points and your locations coming. As I say, it's always intriguing to see exactly where people are coming from, and I see there's lots more of you have just joined us there in the last couple of moments. So please do pop it in there into the chat. I'm keeping an eye all the time on what you have to say here. Hello indeed to Raul from San Juan in Puerto Rico. You're very welcome, very welcome indeed. And I've just noticed that I have lipstick on my teeth. You can't have that on an episode of Fantastic Female Fridays, could you? Hello, Dee is joining us. Daniel from Missouri. Hello, Ravi is joining us from Florida. So I'm going to keep an eye out down there. But while you're all flying in and joining us from all over the world, what I'm now going to do is I am going to introduce you, as I say, to the lady herself, to Celeste Headlee. So what I'm going to do is I'm just going to press my change in scene here. And hello indeed, Celeste. It is super to have you. I've been waiting a long time for this conversation.
Yeah, I keep interacting with you over LinkedIn, but it's great to actually see you live and in person.
Yeah,
kind of.
Exactly. Well, as good as we're likely to get anyway at the moment, that is for sure. And great to see here, as I say, that you're able to join us. So first of all, Celeste, like I ask everyone, what part of the world are you joining us from today?
I am just outside of Washington, D.C. It's a place called North Bethesda, but Washington, D.C. is close enough.
Okay. Yeah, we'll take that. We'll take that. I was actually in Washington, D.C. just for St. Patrick's Day a couple of weeks ago. And I've great friends in Virginia, so it's a part of the world that I really enjoy all the time. So, Celeste, let's get down to business here. And that is, on Fantastic Female Fridays, what we do is we want to have conversations all around amazing things that women are doing right around the world. And then after that, after my guest who's here for the show then leaves us, then we talk through how this links back to the stock market. But one of the key things that, and it's one of the key words that jumped out to me on the front of this book is underliving. And I that was probably really the word that caught me to this. So I've read your book now, and more than once, as you know, because I do keep telling you every time I do. Can you tell me, what does underliving mean, and how do you see that manifesting itself in people's lives?
So to me, that word was apt because I spend a lot of time researching what it is that human beings need to be healthy, to experience well-being. And I expected to find work in there. We're so focused around work that I wanted to see where among all of our inherent needs work ranked. But it turns out work doesn't rank. We are perfectly capable as human beings, as a species, of being fulfilled and happy and healthy without working a day in our lives. So when I talk about underliving, what I mean is that we're not doing the things that we necessarily need to do in order to feel fulfilled and happy and experience well-being. We've sort of focused all of our our time and energy away on this thing that's not necessary for a functional and fulfilling life. And that means the rest of the things that we need to do for ourselves, for happiness, for health, they're getting the short shrift.
And of course, the key thing that I'm sure people are going to be asking as a result of that, Celeste, is while all of that may be true as a human being, there's also the economic need as well that underpins all that. And I think from my research of talking to people about the world of work around the world, work means different things to different people culturally. So what do you say? By the way, I know the answer to this question because you have it all in the book, but what do you say to people who say, oh yes, Celeste, that's wonderful, and I may not need to work a day in my life as a human being, but I certainly do as a homeowner or as a parent or as a person who wants to go on holidays to take the leisure you espouse.
Yeah, absolutely. And of course, you have to satisfy the very first needs that a human being has, which is food, shelter, and water. That's what the job is for, is to supply your basic needs. But the fact of the matter is that we don't just do what we need to do, right? Like we keep working even after we have supplied our basic needs. And I get it that we associate having a larger salary and more money in the bank with security, with feelings of safety, and also with enjoyment. But the research just doesn't back that up. First of all, once you reach a certain level of comfort and stability in your income, your happiness does not increase as your income increases. That's number one. Number two is that we are working all this extra time thinking it's going to bring us more income. And so we put in these hours at night. We put in these hours over the weekend. And yet it shows that people who overwork, the WHO revealed some really stark research showing that people who overwork regularly will die younger. They will shave years off their life. But also, on average, you only see about maybe a 6% increase in wages when you do that. So I'm not talking about what you're doing just to meet your basic needs. Absolutely do that. But beyond that, you don't need to be answering emails at the dinner table at 8 p.m. on a Saturday.
One of the things that comes up in the book that ties right in, there's one term that really bothered me, and the one term with 2 words in it summarizes everything that you're saying there, is the hedonic treadmill. And this frightened me, Celeste, it really did, because you talk there about the sense of happiness and about how income doesn't lead to higher happiness. You also talk about the increase in wages, overworking, and the 6% increase in wages. But the hedonic treadmill is both astonishing in terms of human resilience, as well as frightening in its inability to change over the long term. So I've sounded like I'm speaking in code now, but will you share what the hedonic treadmill is and how you refer to it in the book?
Yeah, so the hedonic treadmill is a coping mechanism that human beings have. In other words, it is how we prevent ourselves from succumbing to despair when something awful happens. It's this tendency to adjust our mood so that when something really awful happens, we can pretty quickly return to the basic level of happiness we had before that awful occurrence. It's extremely useful in that way. Unfortunately, it doesn't just kick in when something awful happens. It also kicks in when something great happens. So if you win the lottery, and you have this really big burst of happiness, that happiness isn't going to stay up here. You will see this rise in your happiness, and then it'll go right back down to the level of happiness that you had before. So let's say you got a huge promotion that came with a really big raise, and for a short period of time, you will experience an elevated level of happiness, but eventually your mood will go right back to where it was before the raise and the promotion. And I understand why that's scary. What it means, though, is that you have to work sort of on that base level of your mood. And those are changes that have to happen over a long period of time. Those are like fundamental changes that will actually adjust that base level, not those events that occur. Those won't change your base hedonic treadmill level. You have to really be working on those issues of feeling fulfilled, feeling as though you have a purpose, feeling relaxed, allowing your body to have a sense of well-being. Those are the things that over time will adjust your level of in the hedonic treadmill, not the raise, the lottery, getting married, those things. You'll return to your base level again.
And that I found absolutely intriguing. And that is where I found myself challenging as I read your book. And I really live it and breathe it too, Celeste. I don't like to maybe, whether it's do a book review or reach out to somebody like you to come on the show, immediately after I read it, I want to see how it sits with me for a while. And when you really get what you're just describing, it does give you a different lens as regards how you look at the world. I'm just going to read out a comment here. And that is, this comes in from Daniel from Missouri. And he says, I think you're right. Jewish culture takes a dedicated day of rest and they are very successful in family and finance. Chick-fil a closed Sunday. Many examples out there, I'm sure. And you actually were pivotal. You don't know this, of course, but you were pivotal in me learning how to take my weekends off. I've taken my weekends off now every weekend without fail since August 2020. So I started reading your book in June. And I have, and they're sacrosanct. And I actually hear myself saying, Celeste, to other people, I couldn't be as productive now if I didn't take my weekends off. And that I would not have agreed with my own self 2.5 years ago if I had said that. But what I do want to tell our viewers today is one of the other reasons that I really resonated with your book and with the whole essence of what you're talking about is you were a previous version of yourself. You basically wrote this book to the previous version of you. So like, and will you talk us through what it was like when you said, right, I'm going to become self-employed and now I'm going to do less, and now I'm not going to be doing as many podcasts, and now, like, just tell us what actually happened. The more you cleared your diary, what happened?
Yeah, so I was working a regular job for a media company. I'm a journalist, and also doing all of my speaking gigs and other things on the side. Those were my side hustles, and it became unsustainable. And then I thought, well, I'm going to solve this. I just won't have this day job, right? I'm making enough money to support myself self-employed. Then I'll have complete control over my schedule. Then, I will have a complete autonomy, and that's going to solve all of this. Unfortunately, it made it worse. And I'm sure that anybody out there who has either become self-employed or started their own business knows exactly what I'm talking about. It got worse. A few things happened. Number one, the amount of things that I had to do to keep the business going and keep myself paid went up. But also, as I began to turn things down, when I would say, no, I don't have time for that speech, or I can't do that, the fees I was offered started going up. And it got to the point where it was too much money for me to turn down. Because I had this idea in my mind that time was money. And so as the fees went up, it became too expensive for me to not do it. And while I was in that frame of mind, my work was absolutely unsustainable. I started getting sick regularly. I'm generally healthy as a horse. I was irritable. I didn't have any time to see my friends. I would turn down birthday parties. I wouldn't spend time with my kid. And so I didn't set out to write a book. I set out to figure out how to solve my own problem. I could not figure it out. I started peeling things away. I'd say, okay, I'm going to take some time off social media. I'm going to spend every Sunday, just relaxing and doing what I like. But I didn't actually know how to relax. I thought that relaxing was sitting there and catching up on my Netflix viewing or catching up on Twitter or whatever, which is not relaxing to my brain and body at all. So this book started just as a research project for me to heal myself. And it was only after I realized how deep this is, how global this toxic productivity is, that I started to realize that perhaps this could be helpful to other people.
It has been. On behalf of us all, it has been for sure. And if we could now maybe move away from the individual that's there, because I really liked the fact that I was talking to a kindred spirit when I was talking to you as I was reading the book. Because as I was disagreeing with you, in many of the things you said, then you said, no, I get it. You don't want to do this, or you're worried about that. And I'm saying, oh, it's like she's talking back to me. So if we move from the individual level up to the macro level, and I'm going to go macro backwards, because you do a superb job of going back pre-human. Like you go back to before the world had humans in it and how human beings actually evolved. Can I stick for a moment right into the Industrial Revolution? Because this is a pivotal period at which you say our understanding of what the world of work is, our habits, and our understanding of what we feel work should be, that changed a lot. And just before I ask you to maybe talk us through things like punctuality and quality and artisan and all these new words that we developed at the time, just before we get there, I just want to just take a pause for a moment, because in the last episode we spoke to a physicist at Fantastic Female Fridays, and I realised in my research for that show that actually in the Industrial Revolution, when we had mass production, that triggered the capital markets, because no longer could I, an individual, take on the risk of business, because business was now millions or billions in today's equivalent terms, and no longer could I, as the owner of the business, be the manager as well. So the Industrial Revolution actually triggered the capital markets. It triggered owner-manager divergence. It triggered a whole lot of other things. So the Industrial Revolution is actually extremely interesting as a period of time for anybody interested in the history of the stock market anyway. That said, let's go back to what the Industrial Revolution did to the world of work and productivity.
Yeah, I don't know how they teach it in Ireland, but certainly in the States, I had no idea how much changed when James Watt, that Scottish engineer, improved the steam engine so it could be used in factories, right? I don't think I really grasped what a massive, earth-shaking change that was. A few things occurred. When I mentioned that time equals money, that originated with the Industrial Revolution. Pre the Industrial Revolution, for most of the time that human beings have been on the planet, we were entirely task-oriented. And that's why a huge number of societies and cultures all around the world throughout history worked less than half a year. They would work in these bursts of energy. They would celebrate a wedding for an afternoon on a weekend. They sometimes spent a full week to celebrate a wedding. That's because they had all these artisans. And in fact, the Industrial Revolution put a massive number of female business owners out of business. Because, as you say, they could not compete on that level anymore. They had these craft industries making lace or making fabrics. And then when the factories came along, they could no longer compete. So we changed our work lives in terms of who owned the power. You used to have these artisans who owned their own tools. They had autonomy. But when you have a factory, number one, it doesn't matter how skillful that person is. It's not how well they make that carved banister. It's how many can they make in an hour. Time literally became money. It wasn't how good you were at your job, it's how much time you could do and how productive you could be during that time. And that just changed absolutely everything. We even have these accounts of employers who literally stole their workers' time. In other words, they would change the hands on the clock to trick the workers into thinking it was earlier than it actually was, so they could quite literally steal their time. So in terms of working hours, a number of things happened. We stopped having all these independent artisans, independent craftspeople, independent business owners. Everyone started moving in towards the factories. They lost their own tools. They lost their own autonomy and their power. Most people began to move into urban areas, whereas they used to be in rural areas and had a tiny little plot of land, even if it was communal. And also, our time was valued more than our skill.
Mm-hmm. I really found it interesting how even the language changed. Punctuality was not about what our understanding of punctuality today. So my understanding of punctuality today is this show starts at 11 a.m. I'm here at 11 a.m. Whereas pre-Industrial Revolution, punctuality meant quality, if I'm right.
Yeah, exactly. And that wasn't the only thing. Our language changed in a number of different ways, but it's just an indication of how deeply this affected almost every layer of the way that we work and the way that we live, the way we educate our children, the way we take care of our elderly citizens as they age. Everything changed.
That said, though, there is a comment that has just come in here that I'd just like to put to you, because again, it must be one that you get quite a lot, and that is Ninja5411, who's often here, by the way, who's often on the show, says, income means freedom.
No, that's not, I mean, I know it feels that way, but you have to have evidence for it. And that's just not backed up. Wealth often means freedom. In our society, in our capitalistic society, we see that there are a lot of different systems that are geared toward giving more freedoms and more allowances toward the wealthy. So you could say that wealth, especially high wealth, means more freedom, but income does not mean freedom. That's not backed up by evidence.
Well, what I'm going to do is, because I know we've only got a couple of more minutes left with you there, Celeste, what I am going to do is I'm going to talk to people about passive income versus active income as well, and a variety of other things besides. Michael also says, hello from hometown in NC, North Carolina. So please do keep your comments coming in. So what do you think of what Celeste is saying? Do you agree? Do you disagree? And let's have that conversation. I'm certainly very, very happy to do that. However, I would like to also now just move on to another aspect of a lot of what you talk about, which is investing in leisure. And your term investing is different to what we might consider in a stock market point of view. And it's really interesting because I could, again, another time that I almost came out in hives at something that you said, Celeste, that I have since though taken on. So let me walk through this process with you. You were talking about our brains and how we get bored and how we don't like that. And why is it that when we're in the shower or when we're on holidays or when it is just before we go to sleep, we get great ideas? And the answer to that is that our brains don't like to be bored. They find their own stimulation. So when we bore them, then we can come up with some very creative solutions. So then you talk about having a hobby that takes a lot of time. So last year I started cycling. And there's many a time I'm on the bike and I could be 50 or 60 kilometers in and I'm bored to tears. And I'm like, well, I'm just waiting for some great ideas to pop out here, Celeste, since they're going. So can you take us through, for anybody who may not know how to, including your previous self, how do we invest in leisure? And then I'm going to give a very different perspective to that later on about how we do that from a stock market point of view. But what's your version of investing in leisure?
Well, I actually think of investing in leisure fairly literally. We invest in other things that are related to our health. We invest in a gym membership, for example. We set aside time for that. We maybe hire a personal trainer. We buy exercise equipment. We invest in healthy food, So we actually put our money there. When I say invest, we are choosing both with our time and with our funds to invest in this thing that is good for ourselves. I think we have to take our leisure just as seriously, which is mean we have to ask ourselves, how much time are we spending on leisure this week, per day? And how much do I need in order to remain healthy? And then let me invest in that. That means sometimes it is a financial investment in that I turn down this extra work I could earn money with, and instead I'm going to put that money towards leisure instead. That is a financial commitment to your leisure. It also means you're making the personal, just the mental investment, the mental commitment to make sure that you're taking time off every day. And what you're talking about in terms of the brain, it's a little bit of a controversial concept in terms of the default mode network, which is this connected group of brain structures that we think are part of your functional, analytical, imaginative, innovative working of your brain, your cognitive processes, which, yes, the brain does not like to be bored. It is very uncomfortable. And so it will look for stuff to occupy itself with. And you can imagine like the librarian sifting through the archives going, how about this? How about this? How about this? And that's when you remember things like, oh God, I haven't called my Aunt Mary in 3 months. I need to call her. Oh God, I was going to fix that one thing on the back door. I need to make a note to do that. Things will bubble up for you. Sometimes they will be very plain things like I just mentioned. Sometimes there'll be new ideas and new thoughts and exciting things, but one way or the other, that's how you get those things to bubble up.
Well, you're talking there about things bubbling up, but actually a question has come in here about the what's at the bottom of all of this. And Prinny asks, how do you increase base level happiness? Base being in capital letters here.
So that's what the whole book is about.
Yeah.
It is that took me, I don't know, 300 or 400 pages to describe. It's not something I can tell you really quickly, except to say that it has to do with shifting your goals and your priorities. There's one entire section which is on the mistake we make in setting goals and how we don't set goals for the long term or our goals that are really about a lifetime's work. What really makes you happy? What is it that you actually want? And which part of the things that you're doing are getting you toward that goal, that big, broad, expansive goal? And which things are just keeping you busy and occupying your time? That's part of the way that you increase that base level for your hedonic treadmill. But again, it's not something that happens overnight. It's not going to happen because you read an article that said, here's the 9 things that successful people do. It's something that you find for yourself that is personally motivated and that takes time.
And I'm struck by your friend who had 4 journals, who you wrote about, or the journal for cooking, and all of these. And your take on goals is really interesting there, from that point of view as well, is that the short term one and the productive one versus that one. So Pranay says, I've just bought the book. Well, there you go. There's the answer. My last question to you, Celeste, is can you just maybe take us through what was your journey of discovery? Because I've actually shared a few things there now during our conversation about what I've done with your book and implemented it that has made a tangible difference in my life. But what has been the tangible difference that almost your journey of discovery has led you to yourself personally?
Yeah, I mean, first of all, I take a lot of leisure now. I have a lot of completely nominally unproductive hobbies. I have more houseplants than you could ever imagine. I do a lot of baking that's very ugly but tastes good. I take my dog for 2 45-minute walks every single day. It's funny because one of the sort of gotcha questions interviewers ask me sometime is, what are you talking about? You're telling everyone else to not do things, and look at all the stuff you're doing. But I'm like you. I found that as I began to actually get a real work-life balance, like balancing out leisure and work, I became more productive. I got more done in a shorter amount of time because I was healthier, because my brain was healthy and was able to click into that deep focus. So in terms of the impact it's had on me, I have a better life. I mean, I can't put it much better than that.
Yeah, that's pretty good. That is pretty good indeed. Celeste, thank you so much for being here and being part of our show today. We know that I know that you are actually a very busy woman. I know that myself directly. And busy doesn't mean busy. I just know that you have got an awful lot going on that is very personal to you, and also in the work that you do. Of course, I also want to tell our viewers as well is that the book that I read is also very different to many of the other things that you're very passionate about. And if you look up your name today, Do Nothing isn't actually very high up there anymore. There's lots of other things in your TED Talk, etc., that are out there. If you ever need someone to step in and talk about your book, you know who to call.
I do.
So, Celeste, thank you so much indeed. Say hello to Ashley for us as well, and we wish you the very, very best in every way.
And same to you. Have a great weekend.
Thank you very much indeed. So everybody, that now brings me to the next part of our show, where of course now what I want to do is that I want to distill some of what Celeste has spoken about there, and what I'm going to do now is I'm just going to take us through some of the things that have come up in that conversation that I want to discuss with you. And I see here that there's a range of things that have come in, so please do share your comments on what we've just heard. So let me first of all talk to you about why I felt Celeste Headlee was going to be a great addition to Fantastic Female Fridays. Number one is a lot of us work very hard for our money, and what the essence of this show is about is women and investing, and also looking at amazing things that women are doing around the world. And my point here is that, are we doing enough to make our money work for us? Fundamentally, that's what VectorVest and people like me are here to help you to do. Right now, I'm currently in Belgium. I'm in Antwerp here in Belgium. We're meeting a range of people in the VectorVest community tomorrow here in Antwerp. That's what I'm here for. And every time that we have an episode, again, we're here to help you make your money work hard for you. The question is that balance right? And what I was genuinely intrigued with, I so totally disagreed with this book when I saw the title. Like, I absolutely disagreed. You can see all my notes are in here now, but I just really and truly disagreed with it. I just didn't like the title. It jarred with me. But I've really learned that it's important to find people that you disagree with, and find themes and discussion points that you disagree with, to broaden your own horizons for a start, but also to further understand yourself as regards why is it that you might disagree with them. And I don't agree with doing nothing. I am a very active person. I'm a very proactive person. I believe if you want something, then I believe, well, then go after it. And this book I felt was telling me to do the opposite. It's actually not really. It really gets into some kind of deep and meaningful issues there. And on that note as well, Celeste is very, very successful in what she does, in her messaging, in her reach, in also the way in which she researches and how she writes, and just the amount of things and accolades and milestones that she's achieved in her life. So I wanted to introduce you to her. And of course, the third thing is I want to discuss truly the financial topics that come out of all of that, like passive income, like investing in the leisure sector, and like also how we can take effective, efficient ways towards doing things that we know are good for our economic and our financial health. So for all those reasons, I thought it was going to be very important to introduce you to her. Now, let's take a look over here. Okay, so Maria says, first of all, hello Maria, you're very welcome. Invest in yourself. Mental commitment is so critical. You're so right. Time management in my case needs improvement. Interesting, Celeste. And her thoughts around time management are her thoughts around boundarying your time management, Maria. That's what I think is really interesting in her book. And then Pamela says, in 2023, I had to plan to retire from my job, but was told don't leave the money on the table. At 65, at 66 in 8 months, it would be full retirement. What do you think? Okay, that's a wider question, and let's think through the various different elements of what you've got going on there. Right, so therefore, Pamela, stick with me and we'll talk about that for sure. Okay, now, first of all, what I'm going to do here is I want to get a couple of things lined up there for you in the background, so that when I switch over to my VectorVest camera, well then you are going to see what it is that I have prepared for you. But before we get to that, again, I just want to have a chat with you, because a couple of you here, who was it that said this? Let me check. Ninja, who said income means freedom. Right, now, I think where Celeste was going with that is that, progressively growing income doesn't mean progressively growing freedom. Where I would think is that there is a baseline, certainly, of income that does provide freedom. And in my own case, on a very personal basis, when I have pursued things that I've really enjoyed doing that have a commercial focus to them, or that can generate an income for me, then it has given me the freedom to make decisions, whether that is to move house and live in an area or in a house that I would like more of, or if it is to leave certain tasks behind or jobs behind or things behind that I didn't find enjoyable. By having that income, then I had the freedom to do so. So from that point of view, I would say, yes, I think income equals freedom, and I think where Celeste is going, but that isn't a linear straight line that continues to grow. All that said, there's passive income as well. And passive income looks at other ideas. And within passive income, there's a range of ways that we can make this work for us. Now, one of my favorite ways to talk about passive income is dividends. We had a whole episode on dividends at Fantastic Female Fridays quite a while ago. And the power of dividends, particularly over time, when you've got consistency and the power of compounding. 2 letters C's there, consistency and compounding. Dividends can be amazing. The impact of them can be absolutely amazing. There's no doubt about that. And also when you look at let me explain what a dividend is, just in case anybody isn't familiar. If I buy a company's stock, right, so I'm going to buy a piece of a company, I'm going to log on here to my stockbroking account and I'm going to buy shares in Disney or Microsoft or KBC Bank or Lloyd's or Bank of Australia, right? If I was to buy a company stock, then they can choose to give dividends to shareholders. It's a choice. It's not like interest on if you put money on deposit or you loan. So therefore, a company can choose to give me some of their profits. And in some companies like Colgate, it's had uninterrupted dividends for years and years and years. And for over 50 years, it has dividends that are not just consistent, but growing as well. Now, when I take into consideration the money that I would get then on maybe a quarterly basis if it's in the US, if I take into consideration that and I take that money and that money grows, of course, as well, the dividend increases over time as the company makes more profit, well, then that can lead to, obviously, passive income, because I'm not doing any more. I've simply bought the stock and the stock is generating an income for me over time. What's even better is if I take the income that has been generated and then I reinvest that into the stock or into the market overall, etc. So when I reinvest that, then of course that money is then subsequently also doing work for me, and we're taking it from there. And look, as I say, I had a whole episode dedicated to this quite some time ago. If you check out Fantastic Female Fridays, where I put a focus on dividends, you'll see a lot more insight into that. However, the second thing is this. Another way that you can generate passive income is not just from the income generated from the stock market, but of course also when we take into consideration the growth of stocks as well. And it's from this point that I particularly wanted to talk to you today from a stock market point of view, to show you how you can do something with the least amount of effort possible. Now, the least amount of effort possible is to put your money into some index ETFs where you're simply tracking an index. And I've spoken before about that. And again, I'm very, very conscious that I don't want to overlap in different episodes on themes that I've spoken about. But what I haven't spoken to you about is what I'm going to talk to you about today. Because what I want to show you today is a way that I feel is the most efficient way to make the most of the tools that are available to you from two different perspectives when it comes to investing. Number one is market timing, and number two is stock selection, right? So I want to really do a deep dive into this, because when it comes to what Celeste is talking about here in this book, it is how do we maximize the leisure that we've got, and how do we do that by doing the work that we need to do in order to serve financially the needs that we have, and then no more. So what I'm going to do is I'm going to show you a minimal touch. I'm going to show you how to do the least amount of work possible using the VectorVest system to make investments in the stock market in such a way that does stand the test of time for sure, but with little effort. And of course, you're all going to want to know about the returns and the results. So I'm going to walk you through how to understand that as well. For any of you who are not VectorVest subscribers, what I'm about to say does use the tools, but you don't have to use the tools in order to follow my methodology. If you want to get the exact results, then of course you would. But what this is going to do is it's going to take you through a way of thinking about investing with efficiency and with an outcome, focusing on an outcome and output. So stick with me for the thinking point of view here. I'm just going to check back over here. Please do as I say, please do keep your comments coming in there. Of course, you can disagree with me as well. You can disagree with me about passive income. You can disagree with me about a basic level of income is, of course, always going to be needed. Any other comments or thoughts that you've had on the show so far, or of course you can tell me as well whether I was right or whether you think differently about bringing Celeste onto the show, because I think, and I did think she was going to be a super guest, and I think she's very, very thought-provoking. And I've gotten to know her well through the book and also through researching her in other ways. So please do keep your comments coming there on YouTube. I'm only delighted to hear them. Okay, now while you are doing that, what I'm going to do is I am going to pop on over here to my other screen. Okay, there we go. And in here, what I'm now going to do is I'm going to show you the VectorVest system. Okay, so for any of you who's not familiar with VectorVest, it is a stock analysis and portfolio management software, okay? And I'm going to show you two key things that it does among many things. Two really key things. So the first one here is market timing. So market timing is that this software looks at how to read what's going on in the market today, okay? So first of all, if you didn't know anything about anything, I'm just going to draw your attention right here to the center, which is that the color guard is bearish. And what this is telling me is that VectorVest does not advocate buying any stocks at this time. It's simply designed like a traffic light. Really, really red means no, the market is not happy and it's going down and it's unhappy and stay away. So of course then we can have very green when it's the opposite, and that means that it's bullish and it is happy and it's full of buyers who have got lots of energy and overtaking the sellers. And then yellow is when either a trend is weakening or reversing. So as you can see quite clearly here today, the color guard is bearish as it can be. And there's lots of red lights over here going on. I can see all of that. Now, let me go straight to a point though. And that's straight to the point that I want to bring you is that when it comes to market timing, whether you're using VectorVest or something else, there's one key thing that you need to know. And that is, when am I in and when am I out? Okay? And in VectorVest, there's a range of different ways of doing it. I'm going to talk to you about one of those ways. But the point I'm making to you is that when you are going to invest in the stock market, specifically in stocks, as opposed to funds, as opposed to indirectly, or as opposed to any of those things, when you are investing in the stock market directly, It means that you're picking certain stocks that you would like to buy. You need to have market timing. You need to know, when am I going into the market and when am I coming out? And now, of course, you also need to know like what stocks you're going to buy and why you're buying them and when to sell them, which we're going to get onto as well in this episode. But for a start, at a very macro basis, you need to know, when am I going in and when am I coming out and why. So, and if, like I say, if you're not a VectorVest subscriber and you're using another market timing mechanism, that's fair enough. Just that's the methodology that I'm talking about. I'm going to show you how we do it. So what you've got here, I'm just going to dislodge this box here. I'm going to make it bigger. Okay, I'm checking out over here just to make sure that I've got everybody with me. Okay. Corey says, hello, I'm from Chicago, Illinois. You're very welcome indeed, Corey. You're very welcome and thank you for being here with us. Now, in here you can see call, okay? I'm just checking here that you can see that. So what you can see here is call. And a confirmed call is the most conservative market timing indicator that we have. In other words, it's the slowest to move. Now, again, I am just, yep, that's perfect. I always need to make sure that I'm seeing what you're seeing so that we can take care of you as best we can. So here in this confirmed call, what you can see here is that we've got a confirmed down call on the 12th of April, right? On Tuesday, the 12th of April, VectorVest system triggered a confirmed down call. Okay, and that means that the most conservative signal in the system had now said, okay, the market is bearish and looks like it is heading downwards, which of course since then is true. And how I know that is when I look over here at the level of the market. Back then on the 12th of April, the level of the market, it's a specific VectorVest index that VectorVest has put together. The level was at 60.79. Today, as I'm live here with you, talking to you right now, it is 59.91. So we can see that it has fallen, right? It certainly has. Now, at another stage, of course, the market will turn and then the market will be rising. And then that's a confirmed up call. And at that stage, again, VectorVest will trigger what that is. And it will be very, very easy to find. Now, if I was to go back to any other time at all, right? I'm going to go back here to market timing. Any other timing at all. Let me go back here. I'm going to go, for example, to a market timing graph, and I'm going to pick a random date, right? I'm going to turn my head away and I'm just going to move. I'm going to move the graph down here at the bottom, just to make sure there that you can see that again. Pretty sure that you should be. So what I've just randomly arrived at here is December 2012 up to December 2013. So it's a year-long graph during the period of time between 2012 and 2013. As you can see here, the graph is beautiful because it's starting at the bottom left and it is moving here to the top right. I got a message after the inflation episode. By the way, my ESG and Tech Show inflation episode has been the most popular episode that I have run yet at the ESG and Tech Show. So if any of you are interested in how to handle inflation, please do check that out because it's continuing. I'm continuing to get feedback on that all the time. But one person said to me after that show, they said to me, you sometimes say that a graph is beautiful. How can a graph be beautiful? And in my opinion, a graph is beautiful if it starts at the bottom left and it moves beautifully up to the top right, like you can see right here. Okay, now in here, I can very, very quickly see what the confirmed calls are. So I'm just going to highlight this right down here at the bottom. If I clicked on confirm calls, now you can see, well, it's probably difficult to see now, but you'll see it in a moment, is I've just switched on the confirm calls because it's lit up. And now look what happens. I can see when a confirmed call was issued over here. Okay, so you can see here the way it's now turned green. I can see when it was generated here and here and here. So I can see the confirmed call up was issued there, for example, on the 11th of September 2013, and it was continuing to be there right up until the end of the graph. So I can go back to any date since VectorVest began, and I can show you whether the market timing, most conservative indicator, was saying to be in or whether to be out. And then you can decide yourself how successful it has been. What I will tell you is that it has never missed a major market turn. The confirmed calls has never missed a major market turn. You know, over the years, and I've been with VectorVest now since August 2011, over the years, people have asked us questions like, well, what were you saying when it was September the 11th? Or what did you say in September 2008? Or what were you saying when the tech bubble was crashing in the early 2000s? Or, of course, the latest one is, what were you saying in February or March 2020. So if I was to, let me just actually I'll just go there for the fun. And here we are, right there we are. Okay. Here you go. This was back here in March 2020, and the confirmed call down was issued on the 28th of February. On the 28th of February 2020 was the time that the confirmed call was issued at that stage. So we didn't even get into March. It didn't even go that far. And this, by the way, was the most conservative signal. So here's my overriding message then is, when it comes to you investing in the stock market, if you're going to invest in specific stocks, first thing you need to have is a market timing indicator. The most conservative one that in the VectorVest system that I'm showing you is the confirmed call, and I'm showing you how you can find it. You can find it on the homepage in the color guard, or as you can see here, I can pull it up here on the market timing graph. In either case, you can find it like that. And whoever or whatever capacity you might be joining the stock market in the future, that is the way in which to do so. Okay. Now, the next thing is, well, that's wonderful, Susan. Now I know when I might be in, and now I know when I might be out. But when I am in, what do I do, right? So let's take a look at that now for a moment. So I'm going to close down the graph, and now what I'm going to do is I'm going to take as little possible action as I can get away with. So here is our VectorVest viewer, right? This is the most. Now, as I say, I'm going to do nothing here. As Celeste says, I am going to take as little action here as I humanly and possibly can. Okay, so I'm going to go to stock viewer in here, and what happens when I go to stock viewer is automatically status quo default position is that I have a list of the top 10 stocks in the entire VectorVest database that is ranked by VST, value, safety, and timing. Value refers to long-term price appreciation potential. Safety refers to consistency and predictability of financial performance. And timing is to do with dynamics and direction and magnitude of share price change. Okay, so without getting all technical, my point here is that this is an indicator that encapsulates the stock's fundamentals, like its earnings and its cash flow and its growth, as well as timing, which is more technical analysis, its direction and magnitude, etc. Package all of that together, and we have VST. Above 1 is favorable, below 1 is unfavorable. And this entire database of 9,194 stocks, put them all together, and then what you've got here is, what I have right here is the top 10 stocks in terms of VST. The largest, not the largest, the top most valuable, safe, and stocks with great timing in the VectorVest database. And this is just what comes up in one click, right? So let me go back here when I say one click. Well, I go on here to my viewer and my stock viewer, and that's it. So 2 clicks if you want to say directly from my homepage. But I'm not doing anything else. No research. I'm not manipulating the database. I'm not trying to understand anything. I'm not trying to look for P ratios and dividend yields, even though I might like to and I would enjoy that. I'm not doing any of that. I'm simply doing what I say I'm telling you, which is I open up the stock viewer and this is what appears. And that is a combination of a market timing strategy, which is when am I in and when am I out? In with a confirmed call up, out with a confirmed call down. And when I am in, I'm simply buying the top 10 stocks in the database according to value, safety, and timing. That's it. That is basically it. That is how I can do nothing. Well, of course, now I have to buy them, of course. But what I'm trying to say is that this type of action that I'm talking about, or this type of a plan, is the most basic use of the VectorVest platform at all. I didn't have to do anything. I didn't do anything. All I did was I went onto the homepage, and I can see here my color guard. Right now it's bearish. Okay, we're not doing anything. When that turns to confirm call up, then what I will do, go into my viewer and find my top 10 stocks. Hold on to them until I get to a confirm call down and sell everything, and then wait for a confirm call up again. That's it. That is all. That is, in my opinion, if you're going to pick individual stocks, the most basic use of the system that you might possibly find. The question you should all be asking me then is, well, if I was to do that, what's likely to happen? And of course, I can't tell you what's going to happen in the future, but I certainly can tell you what's happened in the past. So how I'm going to answer this question is, we're going to do this together. I'm going to go over here to backtester, and backtester is going to backtest what I'm just showing to you. As you can see, I have loads of backtests, but I'm going to show you how to answer that question, right? So rather than me saying, oh, here's one I made earlier, we're going to make it together. So at this point, please do, as I say, we only have a couple of minutes left in this episode. Please do pop your questions into the chat, or your feedback, or your comments, or your thoughts, and I'm going to take a look at it there. When I'm looking down here, this is where I'm checking out what you're saying to me. Okay, so Todd Kennedy is not so happy. Okay, Todd. You can all read his comment there when he says, this freaking market is killing me. Okay, well, let's see what we can do with you there now. Okay, going to click new. Okay, and I'm going to call this FFF backtest with market timing and top 10 VST stocks. Now, in essence, this is a okay, it's not letting me go any further, but right, we'll take it from there. I'm going to build a custom trading system. Okay, in here, I'm going to use market time. I'm going to use my confirm calls, and it gives an explanation in here of what they are. So I'm conscious that I always have limited time in these episodes, much and all as I really enjoyed this show. I always find the time just flies by. So our market timing system, I won't get into it again. All I'm going to say is it's the most conservative market timing system in our database. And in other cases, I can certainly show you more, faster reacting ones. Of course I can do that. And every time, of course, that you have a faster reacting signal, you're going to have to take action more. That was why, in the context, do nothing, I wanted to show you the most efficient way of getting a lot of value out of the system. Okay, so I'm going to move on to the next. So now, when the market goes up, when we've got a confirmed up call, what do? Here's what we're going to do. I'm going to go down here, and where I am going to put in a search here, which is that I simply want to buy top 10 VST. Okay, let me just scroll on down here. VST. Scroll. VST Rockets. Or VST Giants. Or VST Mighty Mites. Now you see, what we actually have in here are pre-built strategies already. So you know what I'm going to do? I'm going to stop this, because I could take an even easier way out and simply use the system to find this for me. But let me just, because I want to stick with a consistent theme here, let me just show you how I could build what I want to build. I am simply going to put in here a new search under my long searches. Okay, I'm going to put in here my long search. Okay, and new search. Yeah, and in here I'm just going to have, I want the VST to be above 1. Okay, and I want top 10 stocks and its VST descending, right? That's it. Okay, and I'm going to see the same stocks now that I would see if I opened up the stock viewer, of course. I'm going to save this into my long searches, which is simply VST top 10, right? So that's all I need to do to just capture that. I could, like I say, I could use one of the other ones. Now, loads of questions are coming in here. Okay, keep them coming. I'm definitely going to take a look at all of those. Right, now let me go back over here to backtester. I'm going to create a new backtest. So I'll just do this quickly now again. So I'm going to do this backtest. I'm going to do FFF backtest. And in here, I'm going to pick market timing or confirmed calls, and top 10 VST stocks. Okay, great. So that is good. I'm going to build a custom one, confirm calls. And this time when I go to my rules, I'm going to go down here to T, because I said top 10 VST, T. Top. Do you know what I'm going to do? I'm going to change this to my long searches actually. I just want to be completely consistent, because we're building this together. My long searches. And when I come down here, I'm wondering, where did you go? Right, we'll go back again. We're going to go back again, just in case that didn't save, although it sounds like VST top 10, yeah. VST top 10. Oh, it went there into Delta searches. Okay, look, that's fine. I'll pop back over here and I'll just build that. It was just it saved in the wrong spot. Okay, so FFF backtest. Confirmed calls and top 10 VST. And build a custom trading system. There we've got our confirmed calls. That's fine. Next. Now, if I go in here into Delta searches for stocks, there we go. VST top 10. Right, that's fine. Perfect. Now, I'm not going to put in any stop criteria. I'm going to take the minimal route through this, right? So no stop criteria. And then, so if when we get a confirmed call up, I'm going to buy the top 10 VST. And then when it goes down, I'm simply going to go to cash. That's all. Okay. So I've got some questions in here like, when your red signal appears in the confirmed call graph, does that mean you need to sell everything? Rodrigo, it depends what you're doing. Okay. It depends what you're doing. In this particular case, yes is my answer, because I am going to follow a path where I'm going to be in when I've got the confirmed calls that are up, and then I'm going to be out when the confirmed call is down. That is going to be the path I'm going to follow with this. Other than that, I'm going to have to use another decision-making mechanism. Okay, so Rodrigo, stick with me and I will explain by that there in a moment as well. So I'm going to click finish here. Now I'm going to test this back to the beginning of VectorVest. Very beginning. 14th of May, 1996, and finish and run. Now, what's going to happen there over the next while, and I leave it run there, you're going to see it, is we're just now going to test how well this strategy would have done over that period of time. While it's doing that, I'm going to answer your questions, and let's have a look at this. Okay, so Rodrigo, back to your point, is that it is important to really know what you're doing when it comes to the market, right? So if you're going to do, like I'm saying, have a market timing system and then decide what stocks you're going to buy and sell accordingly, well, then you need to stick to it. Now, if I bought a stock, what I mentioned earlier, Colgate, because of its dividend, and I'm going to buy Colgate because it grows its dividend every year, has done for over 50 years, it has had uninterrupted dividends long before that, well, then the stock changes over time are likely to affect me less so. So I may not need or want a market timing indicator accordingly. Or there could be other reasons why I might buy stocks or take other decisions in the market predicated on that type of a decision. So my point here is that if you're following a market timing strategy, well, then you need to follow a market timing strategy. And in this case, what I have set up here that I'm currently back testing for you all is what would happen if I was simply to go in at a confirmed call up, come out on a confirmed call down. Okay, you're welcome, Rodrigo. So Prene says, I am like to invest in the long term. I find most of the tools of VectorVest geared towards the short term. How can you help me to educate me on various VectorVest tools for long-term investing? What I'm doing right now, Prene, what I'm doing right now is exactly that. It is the long term. The reason I'm saying the long term here is because this is the most conservative signal that is there. It is the most conservative one that you're likely to come across. So as a result, what you can see then is how this would work over the long term. And also the back test that I'm running for you right now presumes somebody is following that thought process, using conservative market timing and using the top 10 VST stocks, and that's all. That is what this is presumed doing. Now I'm going to go back to you, Pamela. Okay, so Pamela said, 2023, I had planned to retire from my job, but was told to don't leave the money on the table. I'm 65 and at 66 in 8 months, it would be full retirement. What do you think? Okay. Right, Pamela, here's what I think. First of all, what I don't know about your pension is whether somebody else is contributing to it, because pensions operate like this. My name is Susan. I'm going to put money into my pension, and the government then enables me or allows me to put it in tax-free without taking tax off it to incentivize me to keep putting money into a product that can take care of me later on, much later on in life, right? Now, secondly then, it may be the case that an employer part funds that or matches the contributions that Susan puts in. And I don't like it when people use their own name to talk about themselves in the third person, but I'm just trying to give you the circular approach here, particularly while this here is taking place. So now what we can see is that we can the question of leaving money on the table, then you need to go back and think, where does this actually lead me? Where does this actually lead me back to? Because now what I have to consider is, okay, do I then take the position of pursuing this option and taking, the tax relief, as I say, that is coming from that is coming from the government, or taking the tax relief that is coming from what I would do in a scenario where I would stay for longer, and if I do that, well then how might that fare? And that's the question then, as I say, that I think you might need to ask. Okay, so are you leaving money on the table? Perhaps, but of course you then also have to consider, well, what happens next. Now, right, Jim says, is this being recorded so I can watch it again later? Jim, it is recording literally right now as you're sitting here with us, okay? And so yes, absolutely, it's going to be up there. Right, so let's go back here and take a look at how our back test has actually emerged, right? So I'm just going to go in here into reports. Okay, let me take a look at my summary report. Okay, I'm going to take a look here at my summary report now. Okay, so the gain over that period of time has been 40%. And let me go down here. The best position that I had was URBN, and this delivered a $35,000 gain. The worst position that I had was a $13,000 loss. Let me scroll down here now. So when I can also see here that this worked extremely well, but then after 2015 here, this is then where I saw that there was an issue. So I'm going to take a look over there and see what has been happening. So the point here was, buy the top 10 VST stocks. There was no stop criteria, and we were going to try and open all positions the first available day. Don't repurchase the same stock one day afterwards. And for some reason, my graphs aren't appearing. It says no graph is available. Oh, yeah, sorry. Now I know. Yeah, now I know. And the reason for that is because I would be in a confirmed call. And as a result of being in a confirmed call, well, then I would now be in a position where, of course, I would have now left the market. So what I want to do is that I just want to zoom in a little bit here. And let me take a look here. So yeah, I have 0 holdings. And as you can see here, all 2009 and 10 and 11, 12 and 13, all of this would have worked. Yeah, there you can see. All of this would have worked extremely well all throughout that period and would have kept me out of trouble. What I want to show you, though, is what happened over here now in 2020. Okay, let me just scroll in here. And you'll be able to see here is that what I didn't do was go through that significant loss here. Look there in 2020, it was actually quite marginal. It was quite small in comparison. So you can see here how that works. But the point is that you can see how my money was growing and growing and growing all throughout this period of time. And also, I do want to point out that this is excluding dividends. It excludes dividends. So as a result, you would also then have the impact there as well of dividends affecting that as time has gone on. Pamela says, yes, I work for, okay. Yes, of course. No problem at all there, Pamela. That is, of course, what I'm very happy to do and to explain to you, and to explain to everybody as we go along. Of course, that is what I'm here for, and of course to answer your questions. So to go back there to the back test that I was just showing you, is that you can actually simulate what would have happened at various different stages along the way, and about how your money would have risen and also how it might have fallen in certain time periods. And you could see there what I was showing you when it came up with what happened in 2020 or what happened in 2008, and you can see the really big growth there that happened after quantitative easing, particularly there in the earlier part of the decade. And you can see then how it was also impacted by the changing nature of the market then thereafter, and of course how you wouldn't have stocks now. You wouldn't have had them since the 12th of April because it would have kept you out during that period of time. Final point there as well is, of course, this does exclude dividends. Now, I do believe on that note that I have answered all of your questions at this stage, and that I have taken into consideration all of your comments. So first of all, huge thank you to Celeste. Really appreciate the fact that she was able to give some of her time to us and that we could have a chat about her book. And hopefully that there's some things you've taken out of that as well that you can take away and you can consider and implement in your own life, like I certainly have. And also as well that it might just give you some ideas about your own hedonic treadmill and the fact that there's a lot to learn from historical periods and around how we work and the way in which we take that work then and turn it into practice afterwards. And I had said I want to come back to Pamela's query, and I have, and I also said that there was other people there who asked questions, and I've taken care of those too. So, on that note, I am now going to leave you, and I'm going to say we have another super guest that I've lined up for you in May. Going to tell you all about her next time round. I came across her quite some time ago. I think you're all going to really like her, and also, of course, there'll be lots to learn from her too. But between now and then, I want to say thanks to each and every single one of you for joining me here today, right here at Fantastic Female Fridays. Have a super weekend. I'm going to see you soon.